Hi guys, welcome to i-tutor Academy. In today's section, we will start with Unit 10 of MMBC 004, that is Budgeting and Budgetary Control. So let's see the objectives of this chapter. The objective of this unit are familiarize you with the basic aspect of financial planning and the role of budgeting, various types of budgets, some new ideas and development in the area of budgeting. And structure of these units are introduction, financial planning, what is a budget, budgetary control, classification of budget, control ratios, performance budgeting, zero-based budgeting, summary and keywords, self-assessment questions or exercises are there, and further reading section also there. So let's begin with the introduction part. At the beginning of the course, we have emphasized the need for managers to be forward looking for you. Therefore, reviewing the past information alone is not enough, since your job involves predicting and shaping the future of your enterprises. This requires proper planning about all activities of the business. Financing being the lifeblood of a business, financial planning is of utmost significance to a businessman. A budget is an essential tool for financial planning and control. However, before we come to the intricacies of budgeting, it will be useful for you to understand the meaning and implications of financial planning. So, financial planning. Financial planning is a concern with the raising of funds and their effective utilization to maximize the company's wealth. It includes the determination of the amount of funds needed for implementing various business plans, the patterns of financing, the form and proportion of various corporate securities such as shares, debentures, bonds, bank loans to be issued or raised, the timing of flotation of various corporate securities, and despite a sound financial plan, the desired result may not be achieved if there is no effective control to ensure its implementation. The budget represents a set of yardstick or guidelines for use in controlling an organization's internal operations. The management through budget can evaluate the performance of every level of the organization. The discrepancy between planned performance and actual performance is highlighted through budgets. The organization may have to change the course of its operation in a particular area or revise its plans, keeping in view the changing conditions. It will therefore be useful for you to understand the complete budgeting process. In this unit, we shall explain that budget is and what budgetary control means. Besides the importance of budgeting as a management tool, the technique of preparing various types of budgets will also be discussed. What is budget? A budget is a plan expressed in quantitative, usually monetary terms, covering a specific period of time, usually 1 year. In other words, a budget is a systematic plan for the utilization of workforce and material resources. In a business organization, a budget represents an estimate of future cost and revenue. Budgets may be divided into two basic classes: capital budget and operating budget. Capital budget are direct towards proposed expenditure for new project and often require special financing. The operating budget are directed towards achieving short-term operational goals of the organization, for instance, production or profit goals in a business phase. Operating budgets may be subdivided into various department or functional budgets. The main characteristics of a budget are: it is prepared in advance and is derived from the long-term strategy of the organization. It relates to the future period for which objectives or goals have already been laid down. It is expressed in quantitative form, physical or monetary units, or both. Different type of budgets are prepared for different purposes. Example: sales budget, production budget, administrative expense budget, raw material budget, etc. All these sectional budget are afterwards integrated into a master budget that represent the organization's overall plan. A budget is useful in the following ways: it brings about efficiency and improvement in the working of the organization. It is a way of communicating the plans to various units of the organization by establishing the divisional, departmental, sectional budget. Exact responsibilities are assigned. It thus minimizes the possibilities of buck passing if the budget figures are not met. It is a way of motivating managers to achieve the goals set for the unit. It serves as a benchmark for controlling ongoing operations. It helps in developing a team spirit where participation in budgeting is encouraged. And also it helps in reducing wastage and losses by revealing them in time for corrective action. It serves as a basic for evaluating the performance of managers, and it serves as a means of educating the managers. Budgetary control. And no system of planning can be successful without having an effective and efficient system of control. Budgeting is closely connected with control. The exercise of control in the organization with the help of budget is known as budgetary control. The process of budgetary control includes preparation of various budgets, continuous comparison of actual performance with budgetary performance, and revision of budgets in a light of changed circumstances. And the next one is installing a budgetary control system. Having understood the meaning and significance of budgetary control in an organization, it will be useful to know how a budgetary control system can be installed. This requires, first of all, finding answers to the following question in the context of an organization. What is likely to happen? What can be made to happen? And what are the objectives to be achieved? What are the constraints, and to what extent their effect can be minimized? Having found answers to the above question, the following steps may be taken to install an effective budgetary control system in an organization. Organization for budgeting. Setting up a definite plan of organization is the first step towards installing a budgetary control system in an organization. A budget manual should be prepared giving details of the power, duties, responsibilities, and areas of operation of each executive in the organization. And responsibilities for budgeting. The responsibility for preparation and implementation of the budget may be fixed as under budget controller, budget committee, and fixation of the budget period. Budget procedures are there, key factors are there, and making a forecast also. Preparing budget is there, and choice between fixed and flexible budgets are there. And these are the sections, and the activity also there based on that. So let's see one by one, and we will start with the organization or for budgeting. Setting up a definite plan for organization in a first step towards installing a budgetary control system in an organization. A budget manual should be prepared giving details of powers, duties, responsibilities, and areas of operation of each executive in the organization. Responsibility for budgeting. The responsibility for preparation and implementation of budget may be fixed as under budget controller. Although the chief executive is finally responsible for the budget program, it is better to delegate a large part of the supervisory responsibility to an official designated as budget controller or budget director. And budget committee. The budget controller is assisted in his work by the budget committee. The committee may consist of head of various departments, phases, production, sales, finance, personnel, purchase, etc., with the budget controller as its chairman. And fixation of the budget period. Budget period means the period for which a budget is prepared and employed. The budget period depends upon the nature of the business and the control techniques. And budget procedures. After establishing the budget organization and fixing the budget period, the actual work or budgetary control can be taken upon the following pattern. Key factor. It is also termed as limiting factor. The extent of influence of this factor must first be assessed in order to ensure that the budget target are met. It would be desirable first to prepare the budget relating to this particular factor and then prepare the other budget. And making a forecast. A forecast is an estimate of the future financial conditions or operating results. Any estimation is based on the consideration of probabilities. An estimate differs from a budget in that the latter embodies an operating plan of an organization. Preparing budget. After the forecasts have been finalized, a preparation of budgets as follows. The budget activity starts with the preparation of the sales budget. Then the production budget is prepared based on the sales budget and the production capacity available. and choice between fixed and flexible budget. A budget may be fixed or flexible. A fixed budget is based on fixed volume of activity. It may lose its effectiveness in planning and controlling if the actual capacity utilization is different from what was planned for any particular unit or time, example a month or a quarter. And the flexible budget is more useful for changing levels of activity as it considered fixed and variable costs separately. Okay, so this is about today's section, and the next section we will discuss on next video. In between any doubts, you just contact us, and for more videos you just do like, share and subscribe our channel. Thank you so much.
i-tutor ES presents Ignou MBA, complete syllabus coverage classes and individual semester base, subject coverage program for MBA students, online and flexible sessions. For more details, contact 62382 1788.